Well, the GST Council is all set to meet tomorrow. The meeting is the first after the Prime Minister promised a simpler GST regime and went on to say that 99% of items will soon be under the 18% tax slab or below that. Tomorrow's meet is also the first one for the Congress after its revival in the Hindi heartland. The 31-member council now has 14 non-BJP members after the recently concluded assembly polls. We are given to understand that perhaps no big-ticket rate cuts will be announced tomorrow, but there will be rate cuts, but they might want to hold on till the next GST Council meeting in January to announce the bigger cuts. Joining us now, our MS Money of Deloitte and tax expert Rohan Shah. Thanks very much, gentlemen, for joining us. Mr. Shah, the complexion of the GST Council will certainly change. The Prime Minister has made it very clear. He's listed the roadmap for where he expects rates to head. Do you believe that we're now looking at a situation where what was originally the idea of the 28% slab being only for sin goods and for luxury items, we're finally going to come down to that?
I would think so, Shereen. I think whatever we are seeing in terms of statements, whether made by the Prime Minister or the Finance Minister, and the buzz that generally I think is emanating from Delhi, 28% will cover only very, very few items. You could call them sin goods, but the coverage will be very limited, and which is what it ought to be. Because I think the greater that we have a move towards the 18%, which in most countries is the sort of mean rate, the better off we will be in terms of having a GST of the type that we originally envisaged.
Okay. Mani, let me ask you this. You know, while this is, of course, a political call on when the rates will be cut, perhaps some will be cut tomorrow, some later. But let's look at the revenue implications as well. I mean, items like cement, for instance, are still in the 28% bracket, and that could be a significant revenue hit as far as the government is concerned. Now, so far, you know, we've seen the government edging closer to the 1 lakh crore rupee number, but if you discount the refunds as well as the compensation cess, then it works out to in the 80,000 crore rupee range. So there is an issue with revenue collection. With more rate cuts, how concerned would you be?
Okay, so I think revenues have been under pressure. There are no two views on that. They have been under pressure and they continue to be under pressure. Now, having said that, we also need to understand that in the past, when there have been rate cuts, subsequent to that, we have not seen as sharp a dip in revenue as was anticipated. So possibly what is happening is when there is a rate cut, the level of compliance goes up, the number of people paying tax goes up, and the tax base expands. So overall, in GST from the beginning, I think the theme that the government has been playing out with is that if the rates moderate over a long period of time, the tax base will expand. Here again, when I'm talking of tax base, I'm not talking only of the GST tax base. I'm also talking of the income tax base, because both today are very, very closely interlinked. So the tax base overall has significantly increased after GST was launched. The income tax base of taxpayers has also significantly shot up. So when you look at both together, while there will be some temporary pressures on revenue, over a medium term, I don't think there will be too much of a concern on specific items.
Okay. What would your expectation be from tomorrow's meeting, Mani? This is the first where we are going to see a lot more Congress representation, and the Congress has, of course, been pushing for rate rationalization. What would your expectation be in the 35 items that are still in the 28% bracket? What could move lower?
Really speaking, I see the possibility of only few products, you know, having a chance to move lower. Cement obviously would be one. Color television exceeding 20 inches in size is another. Dishwashers and ACs and DSLR cameras and video games would be the other. Because I don't see any possibility of aerated beverages, pan masala, or automobiles or automobile parts moving out. Yeah. Those represent a large number of items in this population that you said. So when we talk of 99%, you know, coming below the 18% bracket, we have to bear in mind that even today already 97% is in that bracket. So it's only moving 2 more percentage.
Okay, so you expect maybe we could see action on color TVs beyond 20 inches, video games, etc., but not for things like cement, perhaps in tomorrow's meeting, or maybe it could happen, we don't know. But you know, Mr. Shah, let me come back to you on the simplification aspect of it, because what we're given to understand is that that simplified form is unlikely to be rolled out anytime soon, perhaps only in the new financial year. What's the feedback that you're getting from people now, both with respect to things like refunds, with respect to filing? I mean, have things gotten any better? What is it that you would now like the Council to take up with the Prime Minister's stated objective of simplification?
I think at a practical level, Shereen, you are finding that, you know, refunds is the one area that people are having really the most challenges with. And that, I think, is to be expected, although nothing impacts sentiment sort of more than the fact that someone who ought to get a refund doesn't get it, especially exporters. What I think you might see, given past record of the Council, I think you will potentially see, you know, this audit process, which was sort of to get over by end of year. I think you will see a further period or enhancement in terms of that. I also sense that, you know, in terms of transitional credits, which have been a problem area, I think you will see some greater facilitation in the context of that. And, you know, you were talking revenue and revenue impacts of numbers coming down, but one move that I've been watching for a long time, and I think many people would, is will we finally see some move towards petroleum products, even if it's ATF and even if it's diesel, you know, are we going to see some very clear-cut announcement on that? So procedurally, I think you'll see some relaxation on audit and possibly something in terms of transitional credit. And it would considerably help if they would give much clearer signals to the administrative force, you know, in terms of refunds.
Very quickly, sir, in exactly 30 seconds, Mr. Shah, you know, the political bickering, of course, continuing with the Gabbar Singh tax and the good stupid thought and so on and so forth. But that aside, you know, what would your expectation really be with the representation of the Council changing? Do you believe that we could maybe now see momentum on things like petroleum, etc., coming in, or ahead of the elections, you expect it to be stalled?
No, I personally think it will come in, not because of the recent political changes, because to its credit, the GST Council has been excellent in terms of, you know, speaking in one voice and voting in one way. So I think it will remain a forum of consensus. I don't think the political equation will change that. But if some of the things which ought to have been done get hastened, I think that's only for the better. And petroleum and inclusion of petroleum, to me, would sort of, you know, be one of those.
All right, Rohan Shah and MS Money, we'll check in with you tomorrow when the GST Council concludes its meeting on both rates as well as any other changes that it might take forward.